Evening, everybody. Hope you can all hear me okay. Hope you're all good. See, there's some of you already in the chat, which is great. For those of you that are just arriving, there is a little poll, which be interesting to see if you could just take part of. Obviously, quite a bit of recent price action at the moment. So I suppose the question of the day is, are we looking at a bull trap or are we looking at the bull market? So yeah, let us know your answers. We'll close out a little bit later on in the discussion. Yeah, so can everyone hear me? I'm just before I dive into everything, I'll just wait for some form of confirmation, and then we'll go from there. Perfect. Cheers for that, Mo. Actually, Mo, you reminded me just to let everybody know. I mean, given we're going to go over it all, but given what's happened over the last, I don't know, 96 hours, 4 days, or whatever, I really didn't get an opportunity to do as much research as I would have liked to have done, which was supposed to be on the token this week, Dash. So there isn't a research token section as such. That's going to be put back a week. If you guys are anything like me, I mean, the amount of news and things that have happened over the weekend, Friday into the weekend, and then yesterday and today, I really just didn't have too much of an opportunity to really give it the justice that it deserves. So that will be done next week, I assure you. And then the week after that, there's been a request for another one called Acash, which we will also look into. Never heard of Acash, so that'll be interesting to see there. Dash is obviously I've heard of, but I've not necessarily ever invested in the past. So we can analyze both of those next week and the week after. We have got an awful lot to cover today, so thanks a lot for tuning in. I'm going to try to keep it as brief as I can. We'll see where we get to. There's been quite a few questions that have been asked, which I'd also like to go over, as some of them have been a couple of weeks. But before we do, and before we dive into the charts, I actually just want to have a bit of a chat with you all, just about where we've been on this journey in 2023, and what we are or aren't doing as RT members. And it may come off like I'm having a bit of a go at some people in the group, and that's not my intention. But sometimes actually a bit of shock and awe could just sort of get people to maybe give themselves an opportunity to have a look at another side of things and maybe see an opportunity that we're potentially missing. So let's just spend 5 minutes talking about that. And we will have a look at it in the charts, but I think at the moment we'll just face cam it. We'll just have a bit of a chat. We'll have a look at what I've talked about in the charts afterwards. But the reality is that since the start of the year, Bitcoin has effectively increased by around about 60%. We started the year in and around 16,000. We've seen it climb up to 23,000 and a pullback, then 25,000, then a pullback, and then today we've seen it go over 26,000. And I think for a lot of people within RT, our macro bearish outlook on the markets has really prohibited us from the ability to try and trade this in any way, in any meaningful way. And we've had plenty of opportunities and also plenty of signals to suggest that there have been clear ins and outs of the markets in which you could have taken advantage of. Yeah, okay, I've spoken about this pretty much every time. So the last 10 videos that we've done this year, I sort of a couple of weeks into it made a big decision to just change my outlook. I'd spent all of 2022 being bearish. Now's the opportunity to try and seize any opportunity I can to get back into the market, which I have been doing. And for full disclosure, I'm probably now about 65% back into the market after what happened in the weekend. But there's still a lot of people that, when I did that poll about 4 or 5 weeks ago, still a lot of people, 75% of you, were still 100% out of the market. And whilst I understand the rationale that maybe why you're doing that, I feel that we as a collective are missing an ideal opportunity to try and increase the size of our portfolios in what is going to be, or what currently has been, a fairly ranging market, and could likely be for the next 6 to 9 months, continue to be a ranging market. So before we dive into that a little bit further, you've got to ask yourself, what camp are you sitting on? Are you in RT to try and develop your understanding of financial markets, predominantly crypto, I admit, and also to increase your portfolio? Or is it a case of you're more than happy, and it's fine if you are, to sit on your hands and wait to try and catch that falling knife when it hits the bottom again? And then once it hits the bottom, then look to get in. And trust me, there are pros and cons about that. I mean, waiting for the market to hit the bottom means you can go on and get on with your life, absolutely. The con is that you potentially miss some opportunities, whilst getting into the market at selective stages means that should we then have a rapid decline down to a new low, you may not have got the initial bang for your buck. So I completely get it. But I just want to go over once again just my thought process on why I've gone into the market, why I've continued to go into the market, and why I think it is the sensible thing to do. We have seen a fall from 69,000 all the way down to 15,000. Since that 15,000 bottom, after the FTX collapse, I was trying to say collapse and crash at the same time there, we saw that 15,400, I think we got in early December, might be November. But since then, we've seen, as I mentioned earlier, a 60% increase in price. Well, I mean, it's pulled back today, so it's probably not going to be that high now. But within that opportunity, we have seen Bitcoin market rally from 16,000 to 23,000. It then pulled back down to 21,000 before climbing up to 25,500. And then we've seen that recent pullback to 19,600 before today's climb up to 26,000. And with the exception of this last 4 days rally up to 26,500, each of those climbs and descents have been fairly slow, fairly slow, as in they've happened over weeks rather than in the space of 4 days like what we've seen recently. But what I suppose is interesting is how we take that emotion side of it. So when we were last at 25,000, I asked again in a YouTube poll, what are people going to do if we get to a price below 20,000? And most of you all said, whether it be in the chat, in the poll, or on Discord itself, that you would actually start to buy in. But I question whether or not people really did do that. And I understand potentially why we didn't. But I suppose this initial monologue is to just try and remind you that if you've got a plan, get out of the way yourself and actually execute it. Now, we saw some pretty bad news last week. We're going to talk about black swans a little bit later on. I'm going to recap everything that's happened. And so we saw a 15% fall in Bitcoin's price over the space of about a week. And I get it. That bearish sentiment means, it's natural to think we could see some further lows. This is it. This is what's going to push it down. But also, it's fallen 15%. I mean, if anything, we'd expect some form of pullback. We've hit a psychological level. We closed the CME gap. All things we talk about regularly. That could seem like an ideal opportunity to get around. So the fact that it dipped under 20 gave people an opportunity to get back in. But likely we were looking for that to be the start of a further collapse down. And unfortunately, that just didn't materialize. Now, no one could have expected what's happened over the last 4 days, particularly with some of the news articles that have been coming out. But we are where we are with that. And I just want to remind you that, for those of you that are feeling FOMO right now, are feeling nervous and genuinely upset that you haven't got yourself back into the market, take an opportunity to identify some levels to get back in. And when it hits them, doesn't mean you have to go 100% in, but actually start to think about executing and buying some of those. Because what that buys you is options. It buys you time and it buys you options because you have some skin in the game. So should the market shoot back up like it has right now and potentially hitting a key resistance area, you could then sell and take some profit, or you can think, you know what, I'm just happy to keep on riding it up and just look at a positive bank balance for portfolio. So yeah, I think that's probably all I'm going to say about diving onto the charts. I'm sorry that I wasted 5-10 minutes just going on it. I just wanted to reiterate that from the top because I have seen people talking about the fact that they were going to get in at 20k, and yet the people that I've spoken to, not many of them did. And so I just want to remind yourself that even after we've seen 3 banks collapse, we've seen 3 very crypto-friendly banks collapse. We didn't see that drive itself down to below 15,000. We saw a 20,000 level, but then we saw some resilience come into that. And my argument at the moment is, unless we see a really significant, newsworthy black swan event, what is it that's going to now drive crypto below those levels, below the below the recent lows of 15,000? We're going to need something mega. And yep, that could definitely happen. I'm not saying that it can't. But also, what we are seeing is some strength at the moment. And perhaps we need to just get rid of that fully bearish mindset, start to just at least have a look at the other side of things. Maybe try and swing trade this a little bit. So anyway, that's all I was going to say about that. Let's have a look at the screens and let's try and have a review of what we're going to talk about. So just move that across. Let's just make sure everything is looking like it should be. Perfect. Everyone can hear me in the chat, which is great. Here comes, but I don't feel confident enough to spot trade without guidance from science for now. Much heavier derivative trading with 25 max risk. However, I'm feeling like I could do the gas trade with a bigger chunk of my pot. Okay, I mean, that's what you're here for the group for, isn't it? And again, I completely understand that is one side of the argument there. But I think with experience, and experience means you have to kind of do it, and by going through some of the course content you got there, you should get at least a theoretical understanding of what you need to do and then play it. And we'll have a look at big turning points, and they are glaring, whether they be higher time frame, moving averages, or RSIs, or whatever that can give you some indication. But I completely understand that there. It's interesting though, because I would say that derivatives trading is a far bigger skill requirement, and from an emotional and also from a technical point of view, and it carries a greater risk. So but if that's what you feel comfortable with, then I completely understand. In terms of the charts, we can see the run that BTC is having. We're going to go over that a little bit later, but over the last 4 days, it has increased just under 30%, around about $7,000, which is pretty incredible. Over that similar time frame, going down onto the dollar in the bottom left, we've seen it falling off, and I mean it's still above 100, but we're definitely seeing a rip down. Ethereum, as obviously this is just ones I track, but it could be any altcoin here. We've seen that mirror the climb on BTC. When we talk about BTC dominance, you'll see that perhaps that percentage gain hasn't been as big, but in terms of the candles, they're looking very similar. And what we've seen with the US 500 is a bit of an interesting picture there, because it followed the dollar for the last couple of days, but actually today, bit of a news event day. We've actually seen with the CPI data coming in as expected, there's been so far a bullish take on that from the markets, and so at least the S&P has certainly seen a rally. We can have a look at some other ones later on. So I'm going to cover the questions that we got as we go through the events of today. Rather than picking them all, I think most of them have their own separate topics. So we will go through those. I kind of started to talk about Ryan's one, but I'll give a little bit of a fuller picture towards the end, time permitting. But that's kind of the ones that maybe just needs to not so important for today. So let's have a look at BTC, and we're going to do things a little different and say we'll talk about BTC for a little bit. We'll go into some new stuff, talk about some of the questions. We'll have a look at some price action at the end. So no research token, as I mentioned. So again, going back to yourself and key indicators. Now, okay, this is a particular indicator, but it's just made up of the 50 and the 200 EMA. Now, what is interesting about this is we can see up until the start of this week, the green is the 50. I'm not bothered about the def cost. Don't worry about that necessarily. But we could see that the 50 EMA was producing some strong levels of resistance on the weekly time frame and driving that price down. Then we had the bad news that happened last week. We saw the price come further down, but it was bought up aggressively over the weekend with some positive news articles coming out. Now, it is a lovely looking low test candle, and I had a discussion in Discord about this one. Whether or not you would have taken it, just given the preceding candles, I'm not sure, but the wick to body ratio is strong on that one. And the fact that it has played out to the bullish side, I'm not surprised to see a green candle like what we've seen on this. What is interesting, and of course, we've still got a few days to go till this is closing, but we burst through that 50, fine. But the 200, which is also used, the wicks have used as a resistance before, is pushing the price back down into that zone at the moment. Now, it is far too early to comment how this is going to close. But all eyes for me are on the 200 EMA in terms of, I think it's a moving average rather than an EMA actually. If that weekly closes below that, then I might look to take some of my portfolio that's already in the market and start to sell that and then look to buy back at a lower price. But for now, I'm happy to just leave it. I'm going to let that candle play out for the next 5 days, and we'll make that assessment when that happens. But you can see just what we've had here in terms of that pump up that I was talking about. These pullbacks have, they've been over a couple of weeks, so we have had opportunity to get back in, and without labouring that point, we've still managed to keep, some of these. I mean, this on the weekly, we do them on the daily previously. We were looking at this on the daily beforehand, and it was looking pretty good. It's bouncing off that one quite nicely. Again, if we don't, I'll tell you what, we'll cover that on the daily when I do it later, because it's a bit crap on the weekly. So where are we looking now? What can be the next points of interest that we want to try and identify? And I think really it is in and around the 28,000 level. I'll draw a little box on this. There's very little preventing a spike in and around up to this area. Probably should pull that a little bit higher just to take up these wicks here. But that's kind of where we're looking at. Now, we turned around at that area at the moment. We've seen some weekly candles in and around June last year. But this is what I would be looking to identify. If we can hold above the 25,000, hold above the 200 weekly moving average from a bullish perspective, I'd be looking to see it consolidate there, push through this level, and then if it can break that level, we're really looking in around the 30k mark. And that is, 100% increase from where we were at the end of last year. So, definitely some opportunity there. Obviously, given the candle size that we've had today, it might not be the best idea to go in at the moment. We've already seen it pull back, $1,500. Really want to see what's going to happen over that on the much smaller time frames. But just be prepared to see how it acts. I mean, around 25,000. Start to consolidate on top of that. There could be an opportunity for us to move in. We're looking in on the daily, and I just wanted to bring this one up here. This is now the 200. And we talk about that drop that we had down on Sunday. So why was I interested in it? I have to show you this over 2 charts. But we had the drop down. We got below the psychological level of 20,000. But then we bounced off this 200 moving average. And again, fairly nice reverse candle wick there. See, this is a hammer because there's actually no wick above the body. It's just gone straight down, buying pressure back up. Not always a reverse candle. I can understand those of you that wouldn't want to play it considering we were in a downtrend there. That's not the only reason I went in there. But the other thing that we did, not on this set of charts, I mentioned it earlier, was we closed this CME gap. So people talked about this CME gap here, the $20,000 CME gap. Well, that's exactly what we managed to close there. Now, actually, ironically, we've gone and created another CME gap just around about here. So people may now be talking about the 21,000 to the 20,000 CME gap. And, maybe there's an opportunity in a few weeks' time, because we are on the weekly and the daily charts here, that could be what we're looking at. But that's one of the other reasons why, for me, it felt like the right time to just push back into the market. It wasn't just BTC, although I did buy BTC, DOT, Link, Near, Glimmer. I think that was probably all I went in on. It's ones that I can stake effectively, so I can't stake BTC, but I just buy that anyway. So that's why I feel like that was a good opportunity to go in. I had no idea that was going to happen. That's just fortuitous, but that puts me in a fortuitous opportunity just because that's where I currently sit. And now I have those options that I was talking to you about. I can have a look and see whether or not some of this stuff, just it's a bit confusing. Bear with me. Get rid of that box now. Talk about it. Get rid of that box for now. We can have a look at, are we going to just slightly wick up here? Maybe it's going to turn around before, but there's definitely some sort of action there. Now, if you're not one that likes to follow the wicks, certainly follow the bodies. Again, get some decent action in and around there. Maybe we get up to 26,000 on a close. Or turning it around, certainly an opportunity to have a look at there. So it gives me options. But just going back, I've been rebuying stuff since July. Okay, granted in July it was just my monthly direct debit into BTC. I was short trading or trying to in and around here, made some mistakes, lost a bit of money. But everything that I've bought spot since July, regardless of where it is, let me just double check. Yep, I can still claim that. It was easier to claim when the price was up here earlier on today. I know he's in profit because we've eclipsed prices that we'd seen prior to this high. So actually, we're talking back now to almost the beginning of June during this drop down from this would have been the Three Arrows Capital capitulation. So that's kind of where we're seeing. But now we're actually on the day. You can see there's not much resistance from that. That crash happened pretty quickly. So you're talking about vector candles, trap liquidity. You're talking about previous price action, whatever. There isn't really much holding it back. And so that is why people are now talking that gap up to 28, 29,000 could happen very quickly. We just need to keep our eyes on that. I think we will leave this chart here for now. We'll talk about some other stuff. We'll come back to price action a little bit later on. But that was just my charts to show you what I was talking about at the beginning. Just have a look in chat. Tim's put, honestly really confused by the economic outlook and how this is translating in the chart. Really thought the bad news was going to drop the markets. It hit my first buy level and then reversed. It's now buggered off. I have my plan but didn't execute. I reassessed my buy levels. Okay, so I had more buys further down, into the 18Ks, 17 even, I think. Not all of them hit, but at least some of them did. So the fact that you at least placed some of them hit, I think that's a positive thing. In terms of economic outlook, I mean, it's interesting is I actually wrote some notes just to sort of cover it, and I forgot that I mentioned one. But we had a bit of a crazy time because over the weekend with the depegging of USDC, which we'll talk about a little bit later on, although not for very long, it was crazy because people in crypto who get into crypto, believe in crypto because they anti-banks and what have you, they were praying for the banks to reopen on Monday because that was when Circle was going to say that they were, people, they'd get access to their funds and we'd get the repegging. That's exactly what happened. It's funny that traditional banking initially helped resolve a potential, I don't want to call it a black swan, but a potential banana skin for crypto over the weekend because we're relying on traditional banking hours. People were actually getting access to a traditional bank whilst crypto's 24/7. But then we had these not bailouts, and that kind of conversation, which, we'll have a look at the banking sector. I mean, trading was suspended yesterday because it was so volatile for banking stocks. And then suddenly everyone back in crypto is like, this is why we're into crypto again, because this is anti-banks. This is exactly what's wrong with the banks. And we're going to talk about fractional reserves and everything else a little bit later on. And so I'm not necessarily surprised that this has happened initially. I do agree with you, Tim, and I do think that there is a much bigger macroeconomic picture that I do not believe that crypto is ready to solve. But right now, we have got people that are fearful and lack confidence in their own banks at the moment. So where are you going to put it in store of value? Well, we know that gold, we'll bring gold up. Gold's doing very well at the moment. It's traditional store of value, and we're seeing that has climbed very strongly over the last few days. But some people may also think, well, I need some diversification, so I'm actually going to put it into crypto. And for those that have never done crypto before, it may be that they look to Bitcoin as that initial safe haven. They're not bothered about the volatility, well, as much as the volatility, but they're not bothered about the volatile gains that an altcoin can bring you. And so the primary focus has been on Bitcoin. And we've certainly seen that Bitcoin has run much further, much faster than the rest of the markets, with Bitcoin dominance climbing quite high. So, yeah. I'm surprised that the markets have been as resilient as they have, but I mean the dollar's not massively fallen today. It's kind of in and around where it opened, spiked up, spiked back down, but it's kind of there. The S&P, it's still below 4,000. Yeah, it's had a fairly decent jump up today, gapped up on the news of the inflation data. Got to also remember daylight savings has kicked in America, so the inflation data actually came out an hour before the markets opened, which meant that the markets could run into that information. Might have been 2 hours actually. Can't get my head around that. Anyway, a couple of weeks' time, the UK is going to catch up. We'll go back to 5 hours difference between Eastern Standard Time and British summertime. But anyway, so yeah, right. CME. So this stands for, is it the Chicago Mercantile Exchange? Basically, it's just the price at which BTC closes on a Friday. It closes in inverted commas when the traditional markets close, and then the price that it reopens at on a Sunday night when the markets reopen. The gap between that is called the CME gap. And there's a very good history of CME gaps being filled, not just in Bitcoin, but across a lot of markets. So that's why people talk about it. Right. I'm going to quickly try and run through this news. There's so much to talk about. We're already 25 minutes in. So we saw today that Bitcoin broke above 26,000. The US data, inflation data came in at 6%. So relatively positive in that that was what was forecast. But you've got to remember the CPI did actually rise by 0.4% to get to that. There's a lot of focus at the moment. It's in, does Powell now have the information that he necessarily needs to look at pausing any interest rates? But the fact is that if CPI data comes in and around what is forecast or under, the markets generally do very well initially. And that's exactly what we saw. We saw a huge rally up. We're starting to see a correction now. Maybe people have got time to sort of adjust to that. Maybe it's just market makers playing with the volatility. We'll just have to wait and see. I don't think there's too much more really to talk about there. I'm not going to waste too much time necessarily on that. For those of you who aren't aware, but you probably will be, you might not have even been aware that Binance reopened deposits and withdrawals for the UK customers. However, that has again been closed down. So as of May the 11th, I think it is, you can no longer deposit or withdraw from UK banks direct into Binance. So again, much like what we're seeing in the United States, we're getting a squeeze from regulators, obviously for our protection. That's what they're using at the moment. So we're going to have to start looking at some on-ramps. Now, traditionally, I've always used Swissball, but I haven't actually moved any money on for a while now. So I can't even guarantee that that's there. And we're starting to see, we get a story like this every week. But now nationwide, this is probably the worst I've seen. Nationwide are restricting transfers to $1,000 a day, but only up to £5,000 every month. So that's through crypto exchanges. I think the worst I'd seen prior to that was Lloyd's I've been Halifax at 3,000. So yeah, we're starting to see some big banks here become very anti-crypto again. NatWest are warning the rise in scams, and that's why they're doing it for our protection. And there definitely are people that need protected, don't get me wrong. But we need to start thinking about, for those of us that are on the sidelines, particularly given the recent history we've had with stablecoins. And stablecoins may not be the safest place for us to keep it. We do have to move back into fiat. Can we guarantee we're going to get that money back in quickly? So again, that may need to factor into your plan. And this goes back to what Tim was potentially confused about, and what I was trying to talk about was, with the banks, the lack of trust within the banks. We'll talk about liquidity crisis and insolvency crisis again a little bit later on. But ultimately, there is a lack of trust with banks at the moment. And whilst we haven't seen a full-fledged run on every bank, we are seeing runs on banks. And so this is the time that Bitcoin has been waiting for, because in the 2008 financial crash, Bitcoin wasn't around. It was created out of that. So now, 15 years later, finally, the Bitcoin community can say this is a real test for what Bitcoin was created for. And whether it's Moonboy optimism and hopium that has driven this price over the last few days, it's just turned into a bit of a snowball that actually, at the moment, Bitcoin is proving to be that hedge against the banks, while the banks are having that lack of trust right now. So it is kind of fulfilling that prophecy. Whether or not it still does that, I don't know. I always get very nervous about how that bullish and bearish sentiment, both sides of the spectrum there, super bullish at the moment across retail. Fear and greed's climbing quite nicely. We're still in the neutral zone, but we were in fear a week ago. So it's climbing out of that. It's about 49 at the moment. So yeah, we need to just sort of temper, I think, personally, where we sit with that. But there is potential room for growth and hope. A lot of people are citing, and don't get me wrong, we'll go over Silvergate, we'll go over Signature, we'll go over SVB in a moment. And a lot of people are signaling the doom and gloom for major on-ramps for the United States customers. But actually, there is an awful lot of crypto-friendly banks still out there. Just these ones were probably the most vocal about their involvement within cryptocurrencies. But actually, there are a few, and we won't go through the whole article, but we've got the BNY Mellon, we've got JP Morgan, Cross River, never heard of them to be honest, but BCB Group, Customer Bank, DBS, OCBC, I've never heard of them, Mercury Bank, Axos Bank, Swiss banks. I mean, we'll talk about Credit Suisse a little bit later on. But so there are still avenues for both institutional and retail to get money in and out. Just as I said, some of the biggest ones that were used have seen their you've gone into liquidation or been forced to close. Right, I think we are going to cover more news, but I think that's kind of the news that's not going to be directly about SVB, etc. To finish there, I'll just have a look if there's anything else. Mo's put, I haven't used Swiss in 6 months and they sent me a new KYC procedure just yesterday stating my inactivity has initiated this. That's interesting. See, technically I get activity every day because I stake my Swissborg coin. And so it's, it rewards me every day. So maybe that's why I haven't. But that's interesting. I'll certainly look into that. I think I'm just going to send like a test £1,000, just see if my bank quibbles about it, and then maybe even send it straight back. Did this kind of on-ramp squeeze occur during the previous bear market? Yes, it did. But actually, in the previous bull market, we had an on-ramp squeeze like you'd never believe. So, Binance wasn't even particularly around, and you couldn't get listed on Coinbase. So what would happen is Coinbase would randomly tweet that they had 100,000 signups available, and you would scramble. And if you weren't there within 10 minutes, you couldn't get on. So you'd end up signing with some absolute dog shit accounts, which is why I have loads of dog shit accounts, because it's the only way to get on. And you still have the same problem with the off ramps. I mean, I had a lot of problems with Barclays originally. Very difficult to get money on and off. But as I've sort of said a few times, I deliberately had a 45-minute phone call with their fraud team, explained what I was doing, and I've never had a problem since. Moving 5 figures in and out, not regularly now, but certainly in the past, has not necessarily been a problem for me. But I haven't done that sizable in some time. But yeah, there were, that whole crypto's a scam. That was the same narrative that was thrown out in 2018, 2019. We had difficulties back then, so it kind of is a repeating cycle there. Right. Okay, so let me just have a quick drink, and then so much has happened in the last week. I actually had to write it down. I'll zoom in because this is basically all the news that we're going to go through. This is just a week. Prior to this, just bear in mind that Silvergate started having issues. So the week prior to this, so it's like the 3rd of March, Silvergate was reporting issues. They had a shortfall that they needed to cover. And then we had the big boys from the crypto world, the exchanges, leave Silvergate and ironically move to Signature. Silvergate then closed their SEN network. We covered this all last week. And now we get to Tuesday the 7th, which again, we still actually covered last week, but it feels like it's a lifetime ago and certainly a completely different narrative that I thought it's worth going over again. But if you remember on Tuesday the 7th and Wednesday the 8th, Chairman Powell, Chairman of the Federal Reserve, those who weren't up to speed with this, had to give testimony to Congress. And he was asking all sorts of questions, not just about cryptocurrencies, but just about the position of the financial market. And he was super hawkish, far more hawkish than he's ever been in any press conference. And his narrative was, we are still seeing sticky, hot inflation. We have got a very stubborn labour market. And the FOMC would not be afraid to not only prolong interest rate hikes, but also be more aggressive in their increasing them. And basically, the market shat itself, and we went from people thinking it was going to be maximum 25%, basis points increase to 50. and it was a complete flip of where things have gone. And then, so some very negative pressure started to sort of form itself on the market. But then we suddenly started to have the banks. I'm just going to start running through this. So then on the Wednesday, and bear in mind, Powell was testifying for 2 days, but on the Wednesday, after market, so after Powell had spoken, Silvergate announced that they're going into voluntary liquidation. It was announced on Thursday as to why. Basically, I'm still talking about Silvergate. And then on Thursday, Silicon Valley Bank, who is a bank you've probably never heard of, but it's actually the 16th largest bank in the United States, and a very tech-friendly bank. So companies like Nvidia, companies like Meta, and all of those lot based out of Silicon Valley, bank with them. They announced that they needed to raise $2.25 billion to cover a shortfall within their books because they were starting to feel the squeeze of a run on the bank. And whilst they had liquidity, it wasn't a solvency issue that they had; it was a liquidity issue that they were going through. And to try and sort of explain the difference, I suppose. So, because I have seen people try and marry up SVB with FTX and sort of a similar thing, but they were two completely different issues as to why they happened. So FTX had a solvency or a debt crisis, so they didn't have any money at all to cover the debts that they needed to pay to their creditors, etc. Whereas SVB, they had a liquidity issue. They had plenty of money, but that money was tied up in long-term assets such as bonds, and so the only way that they could, you take out these bonds, 5-year bonds, and you buy them at a rate, and if you see it out for its entire period, you get a percentage rate of what it is. Well, back then when they bought those bonds, they were, you may get 1 or 2% on those. But what's happened recently is the bond rate's shot up to like 5%. So if they now try and sell their 2% bond, they're not even going to make the money that they originally put within that. So that they can't really sell that to cover the liquidity issue. So suddenly, although they have plenty of money, it's tied up in a place that they can't actually access. So they try to, sell part of their stock effectively at very short notice to try and cover this $2.25 billion. The Californian watchdog, obviously, we're watching this. For whatever reason, they weren't happy with what they'd seen, and they were advising that SVB needed to shut down. There was an immediate run on the bank as people tried to move money out of there, because although it's not a retail bank, it's it's a corporation bank or institutional bank, whatever you want to call it. A lot of people had put billions of dollars with them. They relied on that bank for payroll and bills and everything else. They can't now get that money out. We're talking about an awful lot of companies here. Very significant problem. We move into the weekend, and again, SVB announced that they've got to close on a Friday. It's not the best time to try and settle nerves there, but it did give, as we'll see in a moment, opportunity for people to come up with plans. But on Saturday, it was a Circle, the guys that create USDC, announced that they had a $3.3 billion exposure to SVB. Now, at the time, you've got to remember that the FDIC hadn't said anything, and you were only protected up to $250,000. So there was a pretty big shortfall there. And whilst they were going to get some of that money back, we didn't know how much they would get back and the timescale. So now suddenly USDC has a bit of a run on it. It depegs from the dollar, and I think it drops down to about 92 cents, maybe even 88 at its worst. I'm sure someone in chat can correct me on that. We start to see others, so MakerDAO, who produced DAI, they also had $1.3 billion of USDC at the time. So they activated their protocol to convert that USDC. I don't even know what they converted it into, but that was to try and stave off any problems they had there. A lot of speculation as what that was going to be. Leads into Sunday, and both the US and the UK regulators look to sell their retrospective arms of SVB. Now, HSBC have bought the UK arm of it. I think they paid £1 for it. Not looked into that any more than what it is. And we started to see Senator Yellen, she's obviously a big fan of cryptocurrency. She was very clear to say there'd be no bailout for SVB, but then went on to say that the depositors would be fully protected. And this is where the market pressures started to ease. There was a lot of calls for the Fed and for the politicians as a whole and the government to provide some assurances at the moment. But they were very clear to say this isn't a bailout, it's just to protect depositors. And so later that day, the Fed board announced this $25 billion loan. You can take out a loan for 1 year to provide a backstop for any liquidity issues. So as long as you could prove you had money, they would loan you this. God, I don't know what the rates are or anything like that. And then that could be used for depositors to pay their employees and everything else that they need to do. So felt like, you know, this potential Black Swan event that we had was actually resolving itself. And suddenly, on a Sunday, out of the blue, Signature was advised that the New York State regulators had decided they needed to be closed as well. And at the time, the only reason they gave was systemic risk. So yeah, that came as a bit of a shock because now, as I said, the three biggest and friendliest crypto-related banks had all closed within 72 hours. And just to try and put some perspective on this, if I can find it. Here we go. These are no small banks. So what we're seeing here, this is a list of the largest US bank failures. So we had Washington Mutual in 2008, the biggest US bank failure of all time since 1970. But Silicon Valley Bank and Signature Bank are number 2 and number 3. These are no small banks that are necessarily going under here. So huge amounts. I mean, you know, 210 billion, 120 billion in assets at time of failure. So no small thing that was necessarily happening. Let me get back to my notes, wherever they are. And this was now starting to spread fear into mid-sized banks, if you will. Biden came on, gave a 5-minute speech, you know, basically just told you how the US banking system is safe, it's strong, it's reliable. I mean, we weren't expecting him to say anything else. He started citing that, you know, those that were responsible for this would, you know, they would seek retribution or punishment, or whatever term he used, I can't really remember. But he didn't really give much information away. And then one of the Signature board members said something quite interesting, Barney Frank. He came out and actually stated that one of the main reasons the bank was closed, their bank was closed, was solely to push this anti-crypto stance that the government, the Fed and the SEC have been pushing recently, which is a bit of a side note, but that's an interesting one because, you know, those of us with tinfoil hats are suddenly thinking, wait a second, maybe this is all crypto related. But as I said, the mid-sized banks, they started the trust in the system had effectively gone. And whilst we knew that SVB would be back, there was no guarantee that other banks would necessarily be back. So we started to see significant volatility on mid-sized banks. The opening bell, First Republic Bank fell 69%. And the opening bell dropped from, I mean, it had already been dropping, but it dropped from $70 down to $29. About an hour into trading, they suspended all trading of bank stocks just to try and, you know, alleviate some concerns. It reopened. I mean, First Republic Bank is actually, I think it's up about 50% today, so it's kind of done all right. But now the banks had opened, now that people did have access to the money, now that Circle could get their money, USDC finally be pegged back to $1. Hopefully none of you dived out of that. And the Bitcoin price now starts to rally because people are starting to talk about terms like bank bailouts. People are starting to talk about lack of trust within banks. And we are starting to see this real bullish push for Bitcoin. So Sunday, $2,000 increase. Monday, $2,000 increase. Today, $2,000 increase. It's 10% each day. It's flying up there. And then on Tuesday, so today, you wouldn't have thought it, but this time last week, there was a 70% probability that it was going to be a 50 basis point hike next week at the FOMC. That's now slashed to 0. No one's thinking it's going to be 50. It's about a 75-25 split between it being no increase or a pause, or it being a 25 basis point. So it's amazing how quickly sentiment can shift. But you go back to 7 days prior to that, Powell being super hawkish. And CPI data came out 6% year on year, which is in line with forecasts, as we talked about there. So it's a bit interesting because people are now saying if Powell does push it any higher than 25 basis points, or if he doesn't pause it, can the banks survive? And are we going to see the problem? Well, he's also got the problem of we haven't got inflation under control. So can they survive through that? So next week's going to be very interesting. I think it's got a very tough time. We've got a lot more financial data to come out. We've got PPI tomorrow. We've got some more unemployment data, or employment data, should I say, on Thursday. And then the big one Tuesday and Wednesday next week. So we will be sure to be watching that. I think going through that list kind of covers the Silicon news and the SVB. But this is what, so Silvergate is on the left. We've got Signature Bank in the middle, and we've got SVB there. And this is what you can see. It's happened over the last few days. I mean, some of them aren't moving because they're not there anymore. So this is kind of where things were. Close of play Thursday, close of play Friday. So yeah. What was this one? I just wanted to talk about this trust because let me just start. I am no expert. I'm kind of learning this as well. But I do remember Simon talking about this when I went through the course a few years ago. This fractional reserve banking, and it is crazy actually where things sit. So you deposit your money in the bank thinking that at some stage you'll be able to withdraw that money back out. The reality of how fractional reserve banking works, though, is the bank can then go and take that money, a certain amount of it, a certain percentage of it, and go and effectively trade with that, with no guarantee that they have to provide 100% of that back to you. Now, what was interesting is when COVID happened, the United States is here, reduced the reserve requirement ratios to 0% effective of the 26th of March. So no bank in America has to hold any of the funds that they've deposited. So when we talk about trust, so yes, okay, people are insured up to 250,000. For a lot of people, that's an awful lot of money and far more than they keep in the bank. I get that. But the banks don't have to keep any of your deposits on their books. And you think, oh, that's just the United States. Well, no, absolutely not. And you can have a look here. Australia, none. I mean, there's some. Brazil, they've got to keep 21%. China, 17%. But the EU is 1%. We've already talked about 0. Now, what's interesting is conflicting information about the United States. The UK. So if we go from here, and I don't like to quote from Wikipedia unless I can, verify it. I was happy with what I could find on this table, and it was just an easy summary of it. Effectively, from 2009, what this is saying is that the Bank of England no longer set a target for UK banks. They just monitored it themselves. But you can imagine what they wanted to go with. So effectively, it was 0. But I have seen other documentation that suggests it was 10%. So I'm not sure where it sits, but somewhere between 0 and somewhere between 10%. I suppose it doesn't necessarily matter. That's the point I'm trying to make. The point I'm just trying to make is you think back to the uproar of FTX and how can they have no money? All these depositors' funds, they should have been backed 1-to-1. In fact, in crypto, we expect our funds to be backed 1-for-1. And the irony is, it's traditional finance give us shit for when it's not backed 1-for-1. But as you can clearly see, these banks don't have to back it at all. And even if they do, we're talking single figure percentages here. So, yeah, I think if people were genuinely aware of this, then that trust would be eroded. But we just don't. And I understand why banks need to do this. I understand the cold capital is an argument of that. Don't get me wrong. I'm just putting it out there for those of you that weren't aware. It's certainly in the United States, potentially in the UK, but a lot of other Western countries, it is 0% they're required to hold. How's Australia? Australia is none. 0. Statutory reserve deposits abolished in 1988, apparently. So, yeah. And then just to top it all off, why is that not disappearing? I don't know. Can I reset it this way? No. Oh, well, we're not going to look at it. But Moody's today basically cut the outlook on US banking system to negative and stay stable. So just what you need to hear when there's a bit of a lack of trust in it. I don't know why that won't come up. I was able to read it all earlier. That's where we are with that. And then the next one that a lot of people are looking at is Credit Suisse. So it's not just the US that's got its concerns at the moment. I mean, Credit Suisse has not been doing great for a long time. It's not been run very well. But certainly over the last few days, with the sort of lack of, we are starting to see that price continue on the downtrend. Get its gap down today or this week. And I think a lot of eyes at the moment are on Credit Suisse to see if that is going to have any problems. Again, that starts to have a run on it. What the implications of that going to be? So, can't you just accept the cookies? That's what I thought I was trying to do. Continue with recommended cookies, but it ain't letting me. It's not that important. Okay. So that was kind of my, is this crypto banking a black swan event? And I mean, by the way, the crypto market has responded. No, absolutely not. But the overall traditional markets, for me, I don't personally believe that crypto has earned the right to be considered a significant store of value in times of extreme pressure on the financial system. And that's just it's not old enough and it's too volatile. And as much as we give gold shit, at least it's slow and it's dependable. So should we start to see a real significant run on the banks? I mean, I could be wrong, and people may think, well, I'm going to put it in Bitcoin because where else am I going to put it? But part of me just thinks that isn't necessarily what's going to be the play there. So the fact that those three banks have gone under, the government seems to have come up with suitable measures, whether they are short-term plasters over a broken arm and a severed artery, is left to be seen. But that seems to have stabilized it at the moment. And I just go back to, that original discussion about how are we going to see a sub 15K, certainly in the short time frames. Well, if crypto loses its three largest banks and the entire banking industry in America is under significant strain, and we still don't see the lows there, we really are going to need to see that big event to drive us down. So what I thought going into Friday and into the weekends may actually be a black swan event. How the markets have reacted on Monday and certainly how the crypto markets reacted yesterday and today. Perhaps it isn't at the moment. We just know how to see. Sorry, let me rephrase that. It seems to be something every week that either the SEC or the Fed come up with to try and restrict cryptos. Obviously, we've had regulation squeezes on stablecoins. Had it on staking with Kraken. We've had the cases that are still ongoing. We've had Ethereum being labeled now as a security, which we've not even talked about in the news, but in another case that has been referenced in New York, the judges out and out called Ethereum a security. So that's another interesting element to go there. So I don't see that the Fed or the SEC. I think this is mission accomplished. There'll be other things that come along. They will really try and squeeze it. They are at the moment in the stage of they are trying to fight us. They are trying to restrict crypto as best as they can. Probably for their own narrative, probably to help them introduce CBDCs. We'll have to wait and see where that goes. But I don't see that their battle is over. So I think we will get more negative press, negative news events that could drive it down. The fact that crypto was so resilient against something that potentially could have been so bad. Hats off to it, actually. Right, anything in here? Just before I go, so Australia, government, the government backs each account up to 250,000. Okay, well, I mean, in the UK, it's 85. So I appreciate that's pounds, but I don't know what the exchange rate is with dollars. Okay, there's a video in the course in the big mechanics section. There you go. Basically, they lend to 90% of another bank who lends their 90% on and on. Yeah. What? So bear in mind, I don't know when that video was filmed, but now they can lend 100%. So, okay, right. Let's go and have a look at some Avenger questions. I'll have a quick drink. So Tim's asked, would be really interesting if we could explore the pros and cons, risk and reward of just buying back into the market with BTC versus building a portfolio now. BTC is normally the first mover, so are we better off in BTC and then converting to alts later? I think he's asked a sub question. If we do that, there are taxes and fees. That's not the question. The question was, what is the risk of everything other than BTC being labeled as securities? Okay, well, let's tackle the first part of that question. Actually, I'm going to tackle the second part. There's a huge risk. Basically, the SEC are absolutely adamant that 99% of all altcoins will be deemed as security. The big one is a Ripple case. We know that. Speak to anyone from the Ripple army, the XRP army, they're going to win that one hands down. We are allegedly going to get a ruling, in a matter of weeks, so we'll see where that one goes. But the ramifications of that ruling will be vast. What we're starting to see now are things like NFTs being listed as securities. We're starting to see Ethereum as well as other tokens. I mean, in this case, they talk about Luna and Terra and all sorts of stuff, which I was like, couldn't have picked some of the worst. But if they are found to be securities, if we use the Howey test and they're deemed to be securities, then it's not the end of them. Because even if Ripple's found out to be a security, it's okay. What is the implications of that? the SEC just might go, right, pay a few $100 million in fines, and then you can go about your business. And if that's the case, XRP is big enough, and I'm sure it'll affect the price, but it won't kill it. Some of the really small alts it might end up killing, but it's just going to really restrict the volatility and the gains that we potentially see there. So, yeah, BTC is going to be safe from being deemed as a security just because it doesn't meet all the requirements of the Howey test. I'm not going to bother going through that again. We've covered that enough times. Go back and have a look at some of the videos. I think we even discussed it last week. So that's that. Going into buying BTC. So this is where I want to talk about Bitcoin dominance and how you can trade BTC pairs. We have talked about this before, but I do get asked about it quite a bit. And it's kind of key here. And there are effectively cycles and flows to bull markets. Fiat normally rushes into the market. This picture's all over the internet. Let's see if I can find it. Just a second. Crypto bull run. Let's see if that does it. Yep, here we go. Okay, why can't I just blow that up? Bear with me, it's just loading. I've done it on this screen in case something dodgy came up. And it's not wanting to load. Come on. Apologies here. Okay. Let's save the image. Save. Let's the good old-fashioned way. There we go. Okay. This is what I just needed to have a look at. So typically how we see the bull markets run is there's another stage here, which is money inflow, so fiat inflow. And what effectively happens is you'll find that the vast majority of money moves initially into Bitcoin. And then, as it says here, flow of money moves into Bitcoin, causing the price to surge. Now, because Bitcoin price surges, we'll have a look at how this works, but the Bitcoin dominance also then increases, which puts pressure on altcoins. However, just going back to this, what we then see is Ethereum starts to pick up. And it doesn't mean that because money's got into Bitcoin, the price of any of these others is not increasing. That's not necessarily the case, but we're talking more percentage gains, that dominant side of things. So initially we see that rise within Bitcoin. It can be quite slow, it can be quite steady, but towards the end it starts to pick up quite steep. Then we start to see that starts to taper off, doesn't decrease, but it just starts to taper off. And we see that Ethereum initially picks up the slack. It's the biggest altcoin out there, second biggest crypto, one of the most talked about, one of the most easily to trade. And so that starts to get steeper and steeper and steeper. And again, it starts to taper off, doesn't necessarily mean that it starts to decrease, but money then starts to flow into the larger cap, maybe the top 50 altcoins, and then you can see what happens. It moves down into the smaller altcoins and what is typically then the altcoin season. And when we start to see the altcoin season, the Bitcoin dominance is now on the decrease. Price can still be going up, but the overall market share that the Bitcoin holds is falling against that of remaining altcoins that are out there. So what Tim is alluding to is, would it, instead of just buying a portfolio of altcoins and BTC, is it not just better to jump into BTC first, ride that one up, and then use the profits there whilst the dominance is strong to move into altcoins, whether you follow this 4 phases or particularly just dump straight into large cap, etc. And in theory, that is the perfect way to play it. It's not necessarily as easy as that, because if you have a narrow view of which particular altcoins you want to purchase, they may not move, independently with wherever you want on BTC at the rate that some others move. And so that can cause hesitation, and then ultimately, things speed up and you end up missing it. So in an ideal, perfectly played world, this is the playbook that you can see in front of us. Bitcoin into Ethereum, into large caps, and then into alts, and you're going to make a nice bag from that. There'll always be people who tell you to invest straight into low cap alts, and I can't necessarily disagree with that. But you could investing 199 of them turned out to be utterly dog shit. And it's just that one that pays your bills. So the risk to reward there just needs to be considered. But in a nice steady way, this is definitely the way to play it. So we have a look at Bitcoin dominance. So this is Bitcoin dominance chart. You can find it by btc.d on TradingView. It's on the weekly at the moment. Let's just pinch it a little bit, because if we have a look at the history, it should seem fairly obvious. At the start, it's in the high 90s because there isn't really much else that's out there. It continues. And then what happens? End of 2016, we start to see a bit of a bull run. We start to see Ethereum come onto the market, and that eats into a nice little share of BTC, because there was nothing, there was like Ripple and Litecoin, a few others, but Ethereum, a big player comes in, starts to eat into that, but generally stays in around 97 to 95%. Then we get into 2017, and that's the start of the 2017 bull run, and where Ethereum really took over, and a lot of ICOs launched off the back of Ethereum. People needed Ethereum. We started to get the likes of Cardano and Neo and all the other ones that everyone talked about, and Bitcoin's price was going up, but its share in the market wasn't, because suddenly there wasn't just 10 players in the market, there was 100 players in the market. So the dominance begins to drop as people start to invest more in other tokens. Yeah, we get these pullbacks that happen, and that will just represent where the price was. And then we get to peak low for BTC, with the height of the bull run at the moment. Everything's going parabolic, and then the market pops. But what's interesting is Bitcoin actually peaked here in price, and the week off the 11th of December, I think it was the 15th. It's when it got to $19,800. But altcoins, remember, everyone's investing in those, so they don't move as fast. So they also don't blow up as fast. So people continued to move into altcoins, thinking, "Oh well, BTC's pulling back. We're going to move into altcoins. Ethereum's getting to $1,000." Actually, where it got to, I think it was about 1,300 at the time. Then we can see a bear market, and what typically happens is people run away from altcoins, some move back into BTC, and the dominance starts to climb. Bear market gets pretty deep, and the dominance is back up. I mean, here we're at 70%. I don't think we'll ever see 70% again, because again, back then we were probably talking about 2,000 altcoins. Now we're talking about 30,000 altcoins. So they just have a wider share of the market. And then 2020 or end of 2019 and 2020, and you got to remember that actually 2020 was a bit of a slow burn. We had that COVID correction, but ultimately, yeah, a bit of a burn there. And it was towards the end of the year that suddenly we started to see that run up. And you see this spike, BTC that moved first, and it moved fast. It moved from 20k to 40k in a matter of about 40 days, I think. It was unbelievable how fast it moved. Everyone rode it. It got to a particular high, and then people started to move into other coins. And then we start to see the full force of the bull run. Everyone's moving into the altcoins, you can see here. Start to see those pullbacks that we happen in over the summer, 2021. Then we start to see the market peak again. But you can see, so BTC peaked beginning of November. It was the 8th of November. Market continued to climb because no one knew it was a bear market at the time. Everyone's moving into altcoins. BTC's on the pullback in price. Move those profits into altcoins. Then the correction happens, and now we're in that stage here again, where people are running back into predominantly BTC. So BTC dominance is on the rise, and the key levels that we're really looking at the moment is 48. You can see it quite clearly here. This is an area of interest over the last couple of years, and I think we'll probably get in and around 48 to 50. I'd be very surprised if we made it all the way back up to 70%, just because. Excuse me, the amount of altcoins that are out there, but stranger things have happened. But yeah, so, and remember, so of the total market cap at the moment, which is around about $1 trillion, 45% of that is Bitcoin, so 450,000. I don't know if we can go in coin market cap. There we go. So what is the overall market cap? Global cap is 1.11 trillion. BTC has 475,000 billion. 475,000, that's not correct. 475 billion. So yeah, so that makes sense. I am getting to how you can necessarily trade it, so don't worry, those of you that are waiting to get to the punchline of any of this. So let's have a look at the charts that we've got here. I tell you what, those candles are looking pretty interesting. So what I've got in the first one, this is BTC USD. And then I've got BTC Ethereum. And I've also got DOT Ethereum. But can you see on the right hand side? This is my Binance BTC pair. So I've got a list of every single tradable BTC pair. It's just a good indication when you're doing it. Now, let me assure you that when I started this today, these were all red. But because Bitcoin has pulled back a lot more than altcoins have today, we're starting to see that some of these are turning green. But the vast majority, as we scroll down, seem to be red. Get a few green. We'll get right down to the bottom. So I've just chosen Ethereum and DOT just because I had to do some figures off something, and it seemed like the logical one to do. But let's just zoom out, because at the moment all you can really see is about 7 or 8 months worth. If we just really squeeze these, so now we've got Ethereum, we've got the BTC price. Dot. Got it on here, sorry, so that I need to sort out intervals and date range. So when I move, I'll change it, take the date range off so they work independently now. But you can see that Ethereum, actually the last couple of years, has kind of just kept its peg. Had a bit of a dip. It's kind of kept its peg with BTC. So the percentage that Ethereum has climbed has kind of mirrored what BTC has done. Which again, it's the second largest cryptocurrency out there. It's the largest altcoin. So that kind of makes sense. I'm surprised it actually hasn't dipped a bit further, but it is what we see. But you can see something like DOT. So from the 2021 bull run peaks, it has bled hard against the value of BTC. So BTC, in theory, has kept its value far better than what DOT has done. And again, that makes sense. DOT peaked to around about $55, and it's fallen too. It's priced now around about $6. So it's fallen, I can't even do the maths, 90 odd percent. Let's just call it 90 odd percent. BTC hasn't fallen 90 odd percent. BTC's fallen about, what's it now, 26. Do some quick maths. Maybe it's fallen 2/3. That's about 60%. Again, we can see why that's crushed. Getting into Tim's point. So how do you use this to trade? Well, let's use a real example. But ultimately, what we're looking for is you are going to buy at a certain time BTC. Okay? And of course, at some stage, you're going to have to use fiat currency, or at least a stable coin, to purchase that BTC. But if you're then going to trade it, you need to work on the assumption that the pair you're trading it against is BTC. Okay, so don't worry about what the dollar value is. The fact that you own, for argument's sake, 1 BTC already, it is what it is. Once you've owned it, now all you're worried about is the BTC value, and that's why some people trip up on this, because they, we're so used to talking about trading pairs in dollar value. It can be hard then to just think of it in BTC value, because in the back of your mind, you're just thinking about the dollar value. But we're going to try and use an example. Well, what you want to be looking at is if the trading pair that isn't BTC, so in this instance, DOT, is low, that means you're going to get more DOT for your BTC than what you would have done when it was higher. And then the opposite is true. So in an ideal world, you would convert your BTC into whatever altcoin you want when it is at its lowest. You would then hold it for as long as you possibly could. And as that ratio starts to climb up, when you sell it and your altcoin that you're selling is higher than when you got in, when you convert that back to BTC, you will own more BTC than you originally started with. And that's kind of what Tim's talking about in terms of you take your BT. Well, I assume it is. Correct me if I'm wrong, Tim. You start off with your BTC, so that's the first thing you've gone and bought. And then you go to diversify that. You don't have to sell all your BTC, but you diversify that BTC against altcoins, because BTC dominance is on the rise, so the BTC is stronger than altcoins at that particular moment in time. Then when the bull run kicks in, And we can see, when bull run kicks in, BTC gets crushed. So we had up here in May, we had back up here in November time. 2 peaks of the last bull run. DOT's value increased significantly. And it's the same, it doesn't matter. I'll choose. So this is Uniswap. Similar thing happened. Carla wasn't around long enough, so that's a bad example. XRP, similar thing happened there in April. So you get the point. And has this one been around long enough? Quant. Okay, yeah, it was there in the winter one. Wasn't there prior to that. But you get the point. Let's go back to DOT. And then you sell that, and then when you go to convert it back, you obviously convert it into BTC, and then if you wanted to realize the actual profit that you made, you could then sell that BTC into USDT or whatever it is, and then cash it out. And that's effectively the principle that's got there. Now, the pros of that is if you're very BTC minded and you're in this for the long run and you're just looking to accumulate BTC because the world fiat system is going to crumble at some stage and there's only 21 million BTC and you want to own as many of those as you possibly can, this is a brilliant way to increase your BTC. Stacking sats, it works during bear markets, it works during bull markets. You can do it all the time and you don't necessarily have to sidestep as much. So that's a great way of doing it. The risk for me is just about diversification. If I'm honest, that's probably the biggest risk that there is. And I like to have a more diverse portfolio. So I'm happy to own BTC from the outset, but I don't know which ones are going to do well. I mean, look at Ethereum. Ethereum didn't necessarily do well against BTC over the last couple of years. So yeah, there are swings within there. There's not these huge ones that, you call if you manage to get in at this low here, then maybe you have got a good swing. But generally, it's just range between 7 and 0.7 and 0.8. There's no guarantee that whichever one you're particularly interested in is going to do that. And so unless you're not bothered about that, you're just looking for any that show particular opportunities, then fine. But if you're like me that have tokens that we are interested in, projects that we're interested in, then it may backfire on you. So I would rather have a diverse portfolio in which I'm just focused on the USD value and just look to get in at altcoins at a lower opportunity and just ride the USD value up and then just keep my Bitcoin safe. Now, you all know that I haven't done it in a while, but I'm trying to get back in on the gas spiky fade, and that is exactly taking an opportunity from the BTC dominance. But for some random reason, this one spikes a lot more than any other tokens. So hopefully I get to do this repeatedly. Whereas this BTC dominance trade, generally, you're buying at the lows in a bear market where alts are massively crushed, using your BTC, which also you got pretty cheap, which you've seen the benefit from, you switched in. So it's like a one round in the chain, but maybe 2 if you're lucky, because you might get on a really good pullback like we had during this summer in 2021. But it's not for multiple plays. I mean, I kind of did an example here, which maybe I just post it and don't bother wasting people's time by running through it. But I based it on the 1st of January this year. So if we'd bought BTC on the 1st of January, it was 16,509. ETH was valued at 0.725 and DOT was 0.026. That was just a dollar value. I'm $1,204.37. If I was to convert a whole of the BTC at that time, I would have got $13.77, or I would have got 3,782. Looking at where it was today, now these figures aren't correct because it's pulled back, so I didn't use live figures right now. Just when I started to pull this together. But we could see, because BTC dominance had climbed, actually the value of Ethereum against BTC had decreased. So suddenly my 1 BTC, which I still haven't converted yet, this was just if I had done it at that time, I still just own the 1 BTC. If I'd then converted it, instead of getting 13.77 Ethereum, now I would have got 14.65, so nearly a full Ethereum more. Similarly with DOT, instead of it being 2,644, it's been suppressed further by BTC's dominance, its recent rise, 2,516. So I would have got around about another 200 DOT out of that and just under 4,000. So you could do that across multiple other ones. You could do that across multiple different time frames. I'll probably make it a bit near, maybe do a few others. I mean, they are all formulas, so I can quickly tidy it up. But over the space of the 3 months, or 2.5 months, BTC dominance has continued to increase, crushing the prices. So you can now see that not worried about what the dollar value of BTC is because I already owned it. I happened to buy it. I should actually choose. What I'm going to do is I'm going to go back and choose a time just to prove a point. I'll keep this example here, but I'll choose a time where I bought BTC for something, and then when I go to make the change, even though the dominance has climbed, the actual dollar value is decreased. It will still show a similar uptick there, but just to reaffirm, because I think people might be swayed by thinking, well, of course it's going to go up because BTC's price has gone up. That's irrelevant. I will find another example, and I'll post this one in there. I'll make it look all pretty as well. But yeah, Tim, hopefully that answers your question on BTC dominance. It's kind of a weird one to get your head around, but once you have got your head around it, it is a useful tool. I think the more altcoins that come onto the scene kind of impacts BTC dominance, but it is still a good tool. I'll be honest, I don't deploy it that much myself because like you, I just look at the dollar value, but spiky fade being a good example of times where I do look to do it. And, again, with the spiky fade, whenever people decide to get in on it, yes, of course, you're going to be bothered about the dollar value of gas at the very first time you buy it. But then after that, you're not fussed. It's all about just getting more BTC. Let's have a look. Bijan's put, we're seeing alts 10-20% lower price-wise compared to how they were last time BTC was at 25k. Yes, we are. And again, so if we go back to what time frame is best? You know what? I don't want these. What I want is let's just change these to everything's on the daily now. So you're absolutely right. So, it's the daily as well. Yes, it is. Ethereum's not a great example because it's followed BTC. So let's choose another one. What do people like? Let's go with Link. Link. Talked about that recently. So BTC retesting. I mean, that's looking like a hell of a candle today right now. But was retesting the highs that it made in around 25,000. You look at some of the other ones over a similar time frame. So you look at Link. The Link at a similar period was at $8. We're still at $6.70. So although it's pumped and it looks good, and on the charts it looks like it's had a good green couple of days, it's actually still very far behind from where it was. So altcoins are still quite a bit suppressed. So for those of you feeling worried that you missed the pump because BTC is so high, well, altcoins are lagging behind at the moment. They will explode at some stage, but if you are looking to get in at altcoins, because BTC has taken the lion's share of the recent influx in funds within the market cap, we got it similar with DOT. So DOT, got to $8, just under $8. Now we're flirting in and around $6. So again, a great opportunity to buy in there. And what we can actually see is, I'll find the price. It fell 32% down to there. Oops. Work this way. And although we've seen 18% recovery, it's actually in price value. It's only increased $1. It's still got $2. It's actually only done about a third of its recovery from where we saw it in the February highs that BTC was flirting in around 25,000. So yeah, you're absolutely right, Bijan, because a lot of these are significantly below. There is an opportunity, and I'm not telling you to get in now. We can see that the market's reacting in an interesting way to the BTC pump at the moment. Want to see how this closes, but yeah, potentially there's still an opportunity, even if this does climb all the way back up. These other altcoins, and a lot of them, it doesn't matter what you look at, all of them I'm looking at on my all showing a very similar. Okay, not all the ones I've clicked to do the gas ones there. Jamie's put, if you were holding some bags that you didn't want to hold long term but have dropped in price and you were waiting to get out of break even. I'm not sure if that's a question. Oh, here we go. Next line. Would you just sell those bags at a loss and buy back into something you want to hold long term? Right? Sometimes you have to, like if it's not something you're interested in, then just like with derivatives trading, you're not going to get every single trade right, even if you're trying to do it spot. And And so yeah, and as an example, a couple of the shit coins that I ended up buying with caps and tap, I've sold because I didn't want to hold them for that long. I've sold 80% of each of those. Same with the AI tokens. So I've kept a little bit, but I just wanted to sell. Some of them I sold at a good price, and I'm happy with that. Some of them, have climbed higher now since when I sold it, and I could have made a little bit more. But I didn't want to hold those because they were a decent amount of my portfolio, and I wanted to put it into something else. Price moved to of other tokens that I was happy to spend it on. So I've cut my losses on those and gone. And okay, yeah, you might sell at a profit, but it's the same kind of mindset. If you see something, if you're currently in a loss and you see something that you really like, which you think is good value and it's got a better opportunity to grow, you just got to think about the longer game. Without actually seeing the example, I think that's the best I can explain it. The way the daily BTC is forming, it looks like a liquidity grab. Yep, and we can, we'll have a look at high block. Why not? I just like to look at this. Let's reset it. Let's throw everything on 7 days. Put a bit back on. So, I was watching someone today on YouTube called Traders Reality, and a guy called Tino, and he's on the 1 minute chart, and the way he talks, he's like a horse racing commentator. It's Cheltenham races at the moment, isn't it? And it's unbelievable. I don't know how he does it for 45 minutes, just going. He's so passionate about it all, and just seeing how the liquidity goes. But let's have a look. I mean, we'll zoom in so you can see it. Although this is the daily chart, we're talking about each of these candles is only 5 minutes. So let's try and find out what this is the 13th. Where's today happens? It's the morning. So here we go. Here's the run. So remember, as the color moves from purple to a lighter color to the yellows, that's where liquidation levels are building up. If it's above price action, it's a short liquidation level. If it's below price action, it's a long liquidation. And we can see, I hate this that you do it, but as you build up, we're taking out these greens here, we're taking all these, it's taking out this price here. Now, interestingly, it didn't go some of the others at 2,600. But then we started to see everyone thinking it's going to long it. So these people were, starting to build some longs here. So price has just come exactly back down, and we're attacking this level here. We've got a decent level. We've got $3 billion worth at around about 23,350. No guarantee it's going to get down there, but they're certainly pretty tasty. It's pretty purple above. Movement back down. I mean, we're looking at the wrong chart at the moment, but we could see trap liquidity or what we call vector candles on the charts. It may look to recover. And if it does, that's potentially where the price is going to go. But that certainly does feel a little bit like a liquidity grab there. I agree. So I need to get the questions back up. When people start spending 35 ETH on a cartoon penguin wearing a sombrero, that's a topping pattern indicator. Yeah, absolutely. Absolutely. There still are, though. There still are. It's mad. The floor of Bored Apes is still about 98 Ethereum. So it's crazy. Doomsday scenario. The Fed doesn't control inflation and prints away. BTC, it's 100K, but everything else gets more expensive. Well, that's it. I mean, the talk of BTC hitting $1 million, I have no doubt about it. But what $1 million is actually going to be worth when it gets there? Yeah. Who knows? So you're right. We'll have to do some crazy conversion with M2 charts and all sorts to see what the real buying power of one BTC is when it gets to $1 million. All banks close in on people depositing on exchanges, which stifles any potential bull run during the next halving. Maybe this is irrelevant. So two things. I think it probably is. I think there'll always be roots in. There are crypto-friendly nations out there, so I think that's it. I think the US is still going to create stumbling blocks for innovation within the crypto market. Then I think they're going to struggle. The UK talks a good talk about wanting to be crypto-friendly. Just from a government point of view, just the regulators are not on board with that at the moment. We'll have to see where that one goes. But also, those who are in crypto at the moment, probably like us, sat on the sideline in stables, because they can't get their money back right now. But pounds a piece of shit when the bull run runs again. Floodgates will open. You'll be able to get money in and out. Yeah, you may have to have a conversation and proof of funds and all that kind of stuff. And let's not forget, the HMRC, if we can't get our money off exchanges, how's the HMRC going to get those taxes that they need? So, yeah. Also a confusing future ahead with Iran and Russia making their own crypto to trade with, Brazil and Argentina trying to make currencies to trade with as well. You're right. I think they've got a lot of work to do. And once they've done it, they've then got to. It's fine, and don't get me wrong; these are large companies with millions of people within them. But if they really want to disrupt, then they need to get the West to buy into that as well. Just my opinion. But yeah, you're right. The word deploy just makes me think of do Quan, I know, but I like to call do one. But there's no reason for people to pile into what's before the. Yeah, I think you're right there. I mean, we're so close to it. You're right, and I think the ruling. Well, if the SEC lose, you know, boom time for vaults, especially XRP. They want to buy a little XRP back just in case, because the army will be strong there, regardless of what the current market conditions like. That feels like that's going to be the ultimate spiky fade. Massively fly up on the announcement, and then people will realize we're still in the shit and sell it. But yeah, I agree. Near looks like a Kobo. Yesterday during the I'm going to call it stuff like Near Kobo off this here. I mean, I can already tell that there's going to be some sort of juicy. No, it's not as juicy as I would have thought. Yeah, kind of is 382, 218. Hit off that one quite nicely and being rejected. So, $2, and then if it can't keep that, I mean, there's still, downtrend could just be a failed dead cat bounce, then continuing back down. We'll have to wait and see with that. Okay, we're down. Is that 19k on 19.5? I'm not sure what you're talking about there, but can't stand Tino's voice. I love Tino. I've got a lot of time for him. I think he is very passionate. He's very knowledgeable. Definitely check him out if you've not before. High block. Okay. We're done with high block. So down here, I mean, this is, I appreciate the speed at which the market moved over the last 4 days. Typically, to get down here, we'd be talking, this is a 7-day chart. We're talking a while to get down here, but you're right. This is long liquidation levels in and around 19,600, which people would have, people are piling on because it started off here. Don't get me wrong. When price was quite close, it started to get darker and darker, or greener and greener and greener, and yellow, yellow, yellow. So people are really piling on now. But these are, I mean, we could go. I'm not going to bother getting it up because there's another map that you can use, which is the. I'm going to have to do it now. This one here, which shows you sort of not just the liquidation levels, but the type of the circles, etc. Tell you if they are 25x, 50x, 100x. So this indicates where the line is, and then the length of the spike tells you how much is in and around that level. It's quite an interesting one. We've also got this thing called the delta down the bottom, which, again, don't necessarily want to spend too much time talking about, but let's just say there's a significant imbalance here. I mean, at a stage when we were at the heights, we had nearly $35 billion worth of longs that were out there. That's just screaming for market makers to potentially try and rebalance that. How they rebalance that? Well, you have to drive that price down so those long liquidations get closed. Anyway, it's not something I'm particularly knowledgeable about, so don't necessarily want to chat about it too much here. Right, so we've got other things to talk about, so let's move on to the next question. Might be a dumb question, but it's from Luke. But as it likely, we'll all hold some BTC soon. Can you show me or run through how to store BTC off main exchanges? He's done MetaMask, he's done Exodus, Trust Wallets, etc. But none of them can actually hold BTC. It's already covered. A pointer to an explanation. We greatly appreciate it. Okay. So, if you go in the security channel on Discord, you'll see people talking about cold wallet storages. And here's my 2 cents on this before we talk about it. If you are invested in anything more than 4 figures, anything more than £1,000 worth of cryptocurrencies, particularly BTC, you should use some of that money. £70 is the cheapest one you can get to buy a nano ledger storage device. Okay, now that is a cold wallet storage. What it means by cold wallet is, although technically your crypto is still being stored online in the cloud somewhere, you can't get access to that wallet without a physical device and without you physically being there to either type in a number, put a thumbprint down, whatever particular wallet system you've chosen is there. So I can't stress enough, if you're serious about this game, you need to use cold storage for that. So what do I mean by that? So we got I use a Trezor, which looks, you can see on the camera, looks like that. It looks like what you can see on the screen. There's two types you can buy. There's a Model T and a Model 1. In terms of what they do, there is nothing different about this. The price is different. There is a difference in price. The Model 1 is in black and white, and you use these two buttons. The Model T, which is $219, excuse me, it's color screen and it's touchscreen. So this is $70. This is $219. As I say, in terms of the actual application, there is nothing different. So don't feel that if you're buying a Model T, you're more secure. Not necessarily the case. And then you got your Nano ledgers. I'm sure there are other brands available, but within the Nano system, we've got the Ledger Nano X, which is this one here, and we've got the S Plus. I actually have a ledger, but I don't use it. I had it back in 2018. It just didn't seem to have any space on it. Maybe they've changed, but I'm happy with the Trezor. There's a new one coming out, which is called the Ledger Stacks. Actually, it's due out this month. This one you can store like NFTs and all sorts on it. Touchscreen, looks pretty cool. I'm tempted to kind of buy one just because it looks cool, but totally defeats the point. So you can do it that way. However, you can actually create your own wallet. And I put out in a group I was in that if you know what this website is, if you've used this website in the past, you can consider yourself an OG in crypto. So back in 2017, before the time of ledgers and Trezors, this website here was how you created your wallet. And this is how you create a paper wallet. And yep, I know it sounds old school, but back in the day, this is how we stored our Bitcoin. So a paper wallet is exactly that. It gives you a BTC address, both a public and a private key that you can print out and carry around on a piece of paper. Obviously, the digits that are on there, you just send them to that. It's still stored online, but unless you have the numbers that are on that piece of paper, you can't access the wallet. Now, how you used to do that was you used to go to this address, and then you'd put your mouse over the screen, and you'd shake it around for about 30 seconds. Watch what happens. You see all these green dots? Doesn't matter. I'm just doing it completely random. And you can see that the key is changing as we do it. I've done 50% at the moment. Let's get a bit down this corner, a bit over in the top. Doesn't matter where you do it, it's just generating a totally random key. There we go, 100%. And that's it. So I've got my public wallet address here, which I can send stuff to and I can get people to send it to. It gives you a QR code. And then I got the private key as well. And then you can hit print and off you go. You can print that out, you can stick it in your wallet, and you literally have a paper wallet. And that's as simple as it is. And that's how it used to be done in 2017. Again, on Simon's old course, I think this was like video number 3. I don't know if Habib's in the chat, but he'll remember this, I'm sure. And any other OGs that were around in RT back in 2017. Shout out to you all. But this is, yeah, Jamie's put his back. Still have a folder with the entire Bitcoin blockchain at the same time. They go from 2013. But yes, it still works, still simple. I mean, this is exactly what how a wallet is generated. Well, it's not how they're generated, but this creates all the information that you can see on any other wallet, whether it's a hot wallet or a cold wallet, and you can just use it there. Just a piece of paper. I still get nervous. You stick that in a wallet, you just throw it away, or it gets tatty or whatever. So not the one I'd recommend. Printing out, folding up, and sticking it in your wallet. But perhaps you might be able to put it in print out a couple of copies of it, put it in that fireproof folder. Rip it in 2, whatever you want to do, and put it in 2 separate locations. Absolutely. There are ways around it. But in terms of Luke, this is a free way of you creating a BTC wallet that you can then send Bitcoin to store it off a centralized exchange. And unless someone knows the private key, you're pretty good in terms of someone hacking it. You've just got human error now of either leaving it in the printer at work or wherever, or losing it from your wallet, because if you don't have these digits, you cannot access it. That's the whole point. So that goes down to you as well. So yeah, hopefully that answers that question there for you. Let's have a look. We've gone up 6K in 4 days, so 7K in a week isn't out of the question. It's not. You're right. Let's just get an ordinary chart up. Yeah, you're right, and you can't necessarily rule it out. Typically, what you see after the moves is consolidation and then a drop. You know, there's very rare occasions. There's actually only one occasion I'm particularly aware of in which that was different. And it's still, you know, still over a fair few days. This was, you know, the COVID crash, still consolidated and then climbed back up. Generally, that wasn't a big drop. Maybe this one again, capitulation drop in 2018. But I get your point. You know, anything can happen. You're right. Let's just tidy that up. Move the mouse to create the dots. Yep, used that site before. Felt Alien still does. It is weird. I vaguely remember that video and was looking at it, but couldn't find it lately. Yeah, bit address. That's what it was, wasn't it? I just close that. There we go. Bitaddress.org. There you go. Okay. Mo's put a question I'd like to throw out for any feedback on Tuesday would be buying BTC over the counter rather than through exchanges. It's not something I hear or see as a thing in this community, but I'd like to understand the reality of going down that route. Thoughts, comments, ideas, insights, please. Okay, yeah. So actually, buying OTC is relatively easy, and you can do it on pretty much every exchange. The biggest problem you have is the lowest value I've seen is $100,000. You have to buy $100,000 worth, and then you can go to them, and they'll offer you a special rate or what have you. It doesn't go through the exchange, doesn't go through the order book. I've never done it, so I don't know what rates necessarily they offer you. But if we just take as a quick example, Blue Peter did this earlier, the Kraken. Kraken has an OTC desk. So here we go. Kraken's over-the-counter OTC desk offers a premium service that allows traders to execute orders off the open Kraken exchange. We offer deeper liquidity for tighter spreads, as well as a more private, personalized service for institutional clients and high-net-worth individuals needing to fill large orders. Kraken's OTC desk provides execution and settlement services that are discreet, secure, and ultra-competitive. Get a single quote for 100,000 to $1 million. That's the level they work with. I've not seen any that were under 100,000. So if you can't afford 100,000, then don't worry about it. If you are looking to buy 100,000 BTC, that's effectively 4 BTC you'd be buying today to do that. And you can see where it is. I've not hit this button. Let's see what happens. I have to contact them. That's how you do it, really. You can Google any exchange. There's loads of exchanges came up. I just used Kraken just because I've used it. It's familiar to everybody. But it's actually, it's not difficult. It's not like, have to go some dark corner of the dark web or anything like that. Like I say, these exchanges do it. How competitive their rates are, I have no idea. I mean, hell, you could even go to a chat room, I suppose, and try and find someone to sell you it directly and just negotiate the price with them directly. And then it's just a transfer of the BTC through 2 wallet addresses. So it can be done, and it's not relatively too difficult. Has anyone done it? I don't know. Okay, whilst that has happened, I've closed the poll. So, bear trap, bull market, or no idea? Well, 73% of you think we are having a bull trap, which we may well be. I mean, this candle today is looking pretty tasty. So, evidence is suggesting that. Macro picture, I completely agree. Bull market, 10%. There's a few people that think maybe we are entering into a bull market. And I suppose it's how long you want to define the bull market for. I mean, at the moment, we've been up for 3 months. 4 months, really. So look. 1, 2, 3. Yeah, 4 months. I mean, the low was in November, wasn't it? We're halfway through March right now. Not a bad real return. Could get a couple more months out of it. How long do you class a bull market for? I mean, you go back to 2019, and we had that pump from 3 to 14. So how long did that take? It's obviously longer than. So that was 6 months. It took the correction. 4 months into one at the moment. I mean, I class that as a mini bull run. Not a full-fledged one, but I do class it as that. We all thought it was going a lot higher at the time, I can assure you. But yeah. And 15-year probably in the same camp that I'm in, which is no idea. I'm just so unsure about the markets, if I'm perfectly honest at the moment, in terms of what they're doing and how they're reacting. We used to have such a good correlation between. I've done this again. Why can't? Why have all these disappeared? Let's reopen that. Sorry. But yeah, generally there would used to be a pretty good correlation between the two, but that's not what we're seeing at over the last couple of days. I would have to wait and see. Now, again, there has been a correlation, but you could argue that BTC lags the S&P. So maybe we are going to see the correction the S&P has been feeling. We'll just have to wait out and have a look on that one, but I'm not really too sure where the markets are going at the moment, which is why I'm happy that I'm in the position I'm in, because as I said earlier, it gives me options. I don't really know where it's going, so having a decent amount in gives me an opportunity to evaluate that and also not shit myself when it climbs $7,000 in the space of 4 days. Yeah, that I still was annoyed, kicking myself that I had buy orders that didn't fill, but I haven't decided what I'm doing with that yet. As I said, I'm waiting for that to close. Most but cool, easy and anticipated. That's the only way to buy it back rather than you were buying it directly off others. Yeah, I mean, we talk about Bitcoin Pizza Day. That guy, 10,000 Bitcoin, which was done on was it a Reddit board or Craigslist or something random like that. But yeah, just for 2 pizzas, what he thought was $40 worth of value. So that's where we are in terms of doing, breaking down, having a look at altcoins. I'll be honest, I don't think there's anything really to look at in terms of price movement. With BTC, we've seen the run up here. We've had a look at high block. We've had a look at levels. We've had a look at some indicators such as moving averages, etc. The candle's looking pretty interesting at the moment. There is 2 hours left to go on that. So I think we're going to leave the TA there. But are there any final questions before I jump off? Doesn't look like it. So again, what I'll do then is we'll just go to full screen. Hopefully, I always have to check. Yeah, we have. If that's it from it tonight, then I think that's probably everything I wanted to cover. There was a lot covered there, and apologies if I've gone over things relatively quickly or I've not explained things as best as I would have wanted. I'll tidy everything up. I'll get some information out there. I'll definitely do a bit more on the Bitcoin dominance. It's a difficult one to get your head around, and so people may still have more questions. And if you do, that's that's fine. Feel free to ask away on those. But other than that, really appreciate you spending your Tuesday night with me as always. I'll be continuing to monitor markets. Got PPI tomorrow. FOMC for once. It's not going to be announced on the Avenger call day. It'll be the Avengers is the day before, so we won't know what the rate's going to be. There'll be plenty of speculation in the market in and around that time. How the banks, the mainstream banks, traditional banks, are going to react over the next week will still be interesting. We're going to have plenty to talk about and look through. I will do Dash for the research token, and actually, I'll tell you what I'll do. I'll make another promise to you now. I will do a Bitcoin dominance video, 10-minute video tomorrow. I'll get it out on Thursday, which will explain that a lot better, and I'll have some working examples, etc., so you can really see it. We'll do that instead of the research video. But Dash is the research token for next week. If you've got any questions, please feel free to populate the Avenger chats or just ask me in Discord. And the final thing is just to remind everybody that the trading pub is not on Thursday, it's tomorrow. I think it's at the usual time. So it'll be 2 p.m. on Wednesday tomorrow. So look forward to seeing you all then, speaking to you all then. And other than that, have a great evening. Enjoy the rest of your night, and I'll speak to you all soon. Cheers now.